Hey, what's good, guys? Welcome back to another awesome week of preparation with me, T.Mayne. You guys are back again for another weekly market forecast. Now, I'm super excited about this week's pairs. It's going to require a little bit of patience for us, but when they do set up, guys, they're going to be absolutely amazing. So for today's analysis, guys, we're going into 4 different pairs. So we're going to get into Aussie CAD, Swiss Yen, New Zealand Dollar CAD, and New Zealand Dollar JPY. Now guys, let's kick things off and we'll start off with our Aussie CAD. We'll keep on the 4-hour and just discuss our major structure. So if we pull left, guys, you guys can see this area that we've marked out here. So if we look down here on the 4-hour, what we do see is this market that has essentially been moving to the upside, creating these higher highs and higher lows. But these are the previous higher lows that sent prices to the upside, being able to violate previous resistance areas. So we know from this area here, buyers came in, and whichever buyers came in from this area was strong enough, the buying pressure was strong enough to violate previous resistance areas where we know previously sellers came from. So guys, now that we understand what this support structure is, let's talk about our most recent price action. So if we come down to the most recent price action, what you guys can see is that yes, clearly Aussie CAD is trending down. We've been consistently creating these lower lows and lower highs from a high time frame perspective. And also, if we come into our most recent price action, so just here, what we do see is some nice lows being formed, lows over there, nice equal lows, and we see the structure being broken to the downside, prices coming back and still not breaking and closing above previous support structures. So we can see that Aussie CAD is in this nice bearish run. What we've done, guys, is accommodated for our resistance, established a nice resistance trend line, accommodated for our most recent support structures, and then we've established the support trend line down here. So we know that we're in some sort of a descending structure. What we can also note about this descending structure, guys, is that this is a corrective descending structure. Why? Because as prices are creating these lower lows and lower highs, we see prices manipulating levels of structure, breaking below lows, breaking back above lows, breaking below new lows, and breaking back above those lower structures. So yes, we are creating lower structures, but we're doing so in a corrective manner. Now that we've concluded that, we understand that we're in this descending structure, guys. We do have our first touch, we do have our second touch, so we can be assuming that Aussie CAD can come down to these nice support structures here and complete for us this nice 3-touch structure, giving us a beautiful reversal from the structural area down there. So guys, our best go-to setup, our setup with those probabilities for this buy on Aussie CAD will come in as or if we do reach this third touch of our potential reversal structure. Once we get to that third touch, guys, all we do is we look for those bullish biased setups. So that's how we're going to be approaching Aussie CAD. Long-term perspective, guys, we're looking to buy at our extreme lows, waiting for prices to break below these lower structures over here. Once we've broken below those lower structures, guys, then we can look to see if prices, after violating these lower structures, do we break back above structure and then come back for a retest and confirm that this is just a false breakout to the downside and prices are going to move to the upside. So this is actually where we'll be looking for this beautiful entry. Once we break back above our previous support structures, then we look for that upside continuation. Now guys, let us speak about what's been happening most recently, just so that we can still come out with a trading opportunity if we see that bullishness come in from next week. So what we've seen from a most recent price action kind of a perspective, still on the H4, prices coming in from the downside, from the top, establishing support, establishing resistance, giving us this new support structure. Finally, we see prices coming to break above these previous resistance areas. So a nice impulsive move to the upside, violating previous resistance, giving us that beautiful sign of strength. Why? Because we are seeing our resistance areas in a downtrend being violated to the upside. So giving us a nice sign of strength there. After we've seen this impulsive move to the upside, what we've seen is price correcting towards where? Towards our major support structures over here. Now, most recently, guys, we've seen some bullish momentum coming into Aussie CAD. We've seen a nice bullish engulfing there. Prices coming back to this level and reacting once again. So in case this bullish momentum comes in over the course of next week, what we will be doing is looking at these resistance areas here, waiting to see price break above these resistance areas and then come back to retest these areas. Once we see that retest, guys, we're looking for our bullish continuation for the upside momentum, if that momentum is going to come in over the course of next week. So we have a bullish bias on Aussie CAD, looking for that buy setup, but we're waiting for prices to give us a reason to execute this buy, either by breaking above this resistance area, coming back for a retest, and then obviously signs of rejection and that momentum shift to the upside, or we wait to see prices violate this level of structure, break back above, and then retest. Whether with that corrective structure or with a reversal structure, we'll still be looking for that bullish bias setup for any potential moves to the upside. Now, this is our bias, guys, on Aussie CAD. Hopefully you guys see it. Hopefully you guys can see the reasons why we're looking for that buy. Let's get on to the next pair, that's Swiss yen. We'll stick on the 4 hour with Swiss yen, guys. What I want to show you guys is that we've adjusted for structure, we've accommodated for this new structure, we've been evolving, and I think that's what we're going to go through throughout this video. We've evolved with Aussie CAD, we're evolving with Swiss yen, we're going to evolve with New Zealand dollar CAD and New Zealand dollar JPY. So you guys will get to see how these structures and how we change our biases according to how the structures are developing. Now that we've spoken about that, guys, what we can see here is some nice momentum to the downside, bringing us into this corrective structure over here. So if we come into this most recent price action and look at this corrective structure, you guys will see that we do have some sort of an expanding structure where we have lows being formed. Let's just get this drawing tool. We have lows being formed, highs being formed, we have lower lows, and we have higher highs. So prices are expanding. Now, if we look at the most recent price action just in this area over here, what we will see is this nice bullish uptrend. So we see resistance, we see support, we see new resistance, new support, and then new higher highs. Now, after we saw those higher highs, what we have is higher lows there. These lows being violated nice and impulsively, and then we approach this support structure here. What do we notice when we get down into the support structure? Down on the H1, guys, we have this market decelerating towards our important support structure. So we see this nice deceleration, beautiful 3-touch structure over here. First touch, second touch, third touch. Third touch, we see that nice reversal structure followed by the momentum to the upside, violating as well some previous resistance areas over here. In addition, guys, we've broken back above these previous lower structures there. So guys, because we've been decelerating towards the support structure and we're at support, we're going to be bullish bias on Swiss yen. Bullish bias until where? We have this previous neckline, previous support structure that hasn't really been retested convincingly enough. So that's exactly what we'll be looking for continuation of. So let's mark out our previous support over there. And now that we've marked out that previous support, we can see where our overall targets are. So we're expecting prices to come up and retest this previous neckline before we see any downside continuation to maybe come in and complete this expanding structure. So to give that the touch of our expanding structure. So let's see for prices to come up first, then make that move to the downside, giving us a nice impulse correction, impulse nature to the downside. So guys, to get into our bias, we're bullish bias for next week. We've seen this descending structure. We've seen prices breaking back above our important lower structures. All we're waiting for at this point in time is for some confirmation for us to go long. So what we'll be waiting for is either for prices to give us that reversal structure from these areas here, showing us that we're respecting these lower structures for this move to the upside. That will give us a nice, beautiful entry. And once we see this move to the upside completing at this neckline, guys, that's when we'll then adjust our bias accordingly, wait for those reversal structures to form at our resistance, and then we look for the continuation to the downside to violate these lower structures down there. So this is our bias, guys, on Swiss yen. We're looking for that short-term upside, and then we're going to prepare for that long-term sell-off. So that's our bias, guys. We'll go on to the next pair, which is New Zealand dollar CAD, and we'll go on to the H4. On the H4, what we will see, guys, is we're not going to talk very much about the extreme price action, the extreme lows that we've been running into. But what you guys can see is that we have been decelerating towards some important structural areas. We've violated our corrective structures over there and our trend lines over there to the upside. What we can see in our most recent price action is that we've also, in addition, been holding a nice uptrend. So on our H4 chart, guys, what we can see, price action, lows, highs, lows, highs, lows, highs, and we have equal lows, giving us a nice push to the upside. So we know these were support structures holding this market to the upside, and we can see that these lows have not been violated. And what we've seen, momentum to the upside. We still understand that higher time frame, we're caught in the sideways moving range, but we are seeing the momentum to the upside, and we are seeing these corrective structures forming to the downside. So trading in the direction of the momentum, guys, this is the setup that we're going to be looking at. So on Aussie CAD, guys, New Zealand dollar CAD, what we can see is that we have not retested these previous support structures that prices have violated to the upside and could potentially respect as support for this move to the upside. So we have not yet violated those support structures. So we could still assume that maybe New Zealand dollar CAD is still within a corrective structure, and we might just come down and give this nice, beautiful test of structure before we move to the upside. Nonetheless, we see a double bottom structure. We're expecting that bullish price action. We're going to pull the trigger when we need to. So two setups that might present themselves is obviously a break and a retest of this structure. I would be less interested in taking this trade. Why? Because there'll be less risk to reward ratio. What I am waiting for, however, on those lower time frames is for my corrective structure to form. So we have this corrective structure over here. We have this nice break of structure. What we need to give us that reason to enter this buy is for us to see prices correcting into previous support structures, and then we find that continuation to the upside. So we'll be looking at these previous support structures within this small corrective structure over here for prices to maybe retest. If we find this corrective structure, we're in. If we don't find this corrective structure and we see prices maybe moving to the downside, we'll accommodate and evolve with the price action, accommodate for our new highs, and then look to take a better buy. A buy where? A buy at support, much lower than the first buy that we're looking for. So obviously much better risk to reward as well. Now that we've spoken about NZDCAD, guys, we've got a bullish bias. See how our New Zealand dollar CAD position looks very similar to our Australian dollar CAD position, our Aussie CAD position. We're both, I guess, looking for those potential bullish setups. But the one difference is that if we go onto the H4 and we look at our structure, what we can see is Aussie CAD or New Zealand dollar CAD has already started an uptrend on this H4. So we're already seeing higher time frame structure trending in the direction that we're looking to take this trade. However, if we look at our Aussie CAD position, what we will see is that prices are still in this bearish run. All we have to work off is a sign of strength, expecting that higher low to form. Now, guys, you can see which structure gives us the better probabilities. Obviously, the structure that has already started trending in the direction of the momentum that we are looking to trade. That's New Zealand dollar CAD. We are seeing this uptrend. The probabilities are much better on New Zealand dollar CAD than they are on AUDCAD. That's why we're still waiting for prices on AUDCAD to potentially come and complete that third touch of our descending structure. Remember, we only had two touches. Prices are here giving us a potential higher low, but we are also opening ourselves to the completion of this third touch before we see that bullish momentum to the upside. So keeping correlation into account at all times, understanding that just because these pairs share a quote pair, which is the CAD, they can be and they are in some way positively correlated. So let's go on to the last pair that we are going to have a look at today, guys, and that is our New Zealand dollar JPY. So on New Zealand dollar JPY, we're on the 4 hour. What we can see, guys, is a market that has been trending to the downside. If we look at our major levels of structures. We have resistance up top, we have some new support, we have resistance, we have a higher low, we have a higher high, we see prices coming down to give us a new lower low. So if we take into account major support structures and resistance, we have support, we have resistance, we have a new lower low. So what we can see is that clearly there is a downtrend. If we just isolate our most recent price action, what we also will find is some downside momentum. Now we see in this area over here that prices have been fairly impulsive to the downside. We've entered a corrective structure. We've then continued that momentum to the downside with another impulsive move. So we can conclude that this is our impulsive phase of the market, and ever since we created these extreme highs and these extreme lows, prices have entered some sort of a corrective structure. Now, taking into account, guys, just our extreme structure, what we have is we've accounted for our extreme highs. We have a first touch, we have a second touch. Now we can see prices can come and give us completion of this third touch for that momentum to the downside. Now that we have that, we've also isolated our support structures, just giving us a nice ascending structure that we have here. If we go down onto the H1, what we can see is prices. Let's look at the extreme structure. So this is also our H4 structure as well. Looking at our H4 structure, guys, what we have is support, support, and resistance. So we have previous support structures that we've seen buyers coming into the market being able to violate previous structural highs. So nice and important support. What we can also see is after we saw this violation of highs, prices have begun to start decelerating towards the support structure. So we've isolated a structure. We have our first touch, we have a second touch, guys. We could come and give this third touch for this move to the upside that completes our structure and gives us that sell that we've been looking for. So this long-term sell to the downside. Now, I guess, guys, it will be completely up to your discretion whether you want to take this buy as well. I also might align myself on the direction or in the direction of these or of this buy trade. If prices come down, give me a beautiful reversal structure followed by a nice entry to the upside, I will be looking to capitalize on a potential short-term buy. Where I will be looking to manage my trade buy is by the time we get to important key levels of structure. So this previous resistance that was broken above and prices broke back below. Nonetheless, guys, we know what our long-term outlook is. Long-term outlook is that we want to be selling these JPY code pairs because we've been seeing a lot of momentum to the downside on these JPY code pairs. Obviously, our structure can only complete at the third touch of this pattern over here. So that's what we'll be waiting for our long-term bias is once prices get in this area, we'll be looking for those reversal structures for the potential momentum to the downside, guys. Now that I hope you guys have seen how we've been evolving our structure, I know we've been looking for bullish biases on New Zealand dollar JPY, waiting for our inverse head and shoulders structure to complete at the 90% rule of or rather let's just say at the beginning of where our structure started, which is over there, and we have not been seeing convincing buying momentum. Yes, we were able to get into some beautiful buys, but what we've been seeing is prices correcting to the upside. We have resistance, prices broke above our resistance, broke back below, corrective price action over here. We have new resistance, prices breaking above our resistance, breaking back below. So we clearly see that yes, as much as we're expecting that bullish momentum and price is creating those higher highs and higher lows, we are doing that correctively. So we're trying to isolate our structure, adjust as the price is developing, accommodate for the new structure to see where the next potential higher time frame momentum could be coming in. And by the looks of things, guys, higher time momentum could be coming into the downside to complete this nice, let's just go back up to the H4 to complete, guys, this beautiful impulse correction impulse structure. So that's what we're waiting for. Short-term upside bias, long-term downside bias on New Zealand dollar JPY, guys. We have reached the conclusion of this week's YouTube video, guys. Hopefully you guys enjoyed these four pairs. You guys see the opportunities that these four pairs are going to give us over the course of next week. Hopefully we're ready, hopefully we're watching, hopefully we pull the trigger when we need to pull the trigger, guys. If you have received the value that was intended for you guys, drop this video a like. Let me know that I am sharing some value with you guys. Otherwise, if you're not subscribed to the channel, definitely do subscribe to the channel because we do come out with value-added content like this every single week. Otherwise, guys, this is T.Mayne, your FX Chasers mentor. I will see you guys in our future videos. Have a good week, guys. Cheers.